What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, is a glorious day because we're back. We're back! It's been so long. I felt like it's been years since we've been talking here. Of course, it's probably just been a couple months, right? Had to go back to the drawing board, so to speak, find some game plan for us to do that would make everybody happy, pretty much. So that's what we're doing. And here I am, 11 a.m. Central here on Mondays. Going to give it a little bit of time for people to trickle on in here as I see a few of you in our chat. Going across the bottom of the screen in a new font, which I will probably change. See the email livetrader@zax.com. You go ahead and shoot those emails. Make sure you're on the distribution list. And also the link to the Discord channel that we're on there. Lorraine, PJ, Kurt, what's up, everybody? How you guys doing? Again, the sound is not the greatest. I understand. I was telling people in my little test show earlier that I was setting up. I got my green screen studio proper set up now, and a lot of my audio equipment I had to put over there. So, you know, so this is what we're dealing with. Just me on my gaming headset. I don't think it's that bad, though. It doesn't have to be, you know, we're not recording a Grammy here, although these words are velvet smooth. I think it's okay, right? Still got a little music in the background, so I can kick it. Still got the dog here, trying to get me to throw the ball. Everything's cool here in Sunrise. I got one of these days I'm going to give you guys a picture, a little tour of the house that I got going on here. Pretty cool. I got all these new lights, you know, the Philips Hue. So we've got all these lights all over the place, behind the couch, underneath the cabinets, underneath the island. It's awesome. It's tons of fun, but I'm kind of nerdy, so I like that kind of stuff. Hey, everybody. Hey, Ron, how you doing? Tracy, Richard, Kyle, what's up? Okay, so we're going to do these a little bit differently. Whereas before we would do one ticker and, you know, really do a deep dive on it, I thought it would be more advantageous for us to do these in the beginning of the week, take a look at what the major reports are for the week, and try to identify out of those major reports which one is likely the best opportunity. So, you know, something like that. Cubs are under 500? Are they? Because I thought they were 5-4 as of last night. I was at opening day down here for Cubs Marlins, and I burned the tops of my knees. Pretty hardcore. Kurt, in the description of this video, I give away the tickers I'm talking about. So, I guess you could say you didn't see it, because you're right on 1, 2, 3, 4... There's another one I threw in there. WFC. So we're going to look at those. I looked at the Fastenal. I looked at BlackRock. But I don't know. You know? And I think the point of these is they're going to be more kind of conversational, and we'll knock around some stuff, some ideas. So if you guys do get ideas as to, you know, something else to see, we could do that. It's very fluid here. We got a lot of flexibility to do what we want. Okay, so this is how we're going to kick it off. Lines on charts. We could do lines on charts. Or let's kick things off as we always do with the price consensus and EPS surprise charts here on Zax.com. So that's how we're going to do this. So we're going to do we're going to look at the price consensus. We're going to look at the technicals. And we're going to do that just kind of rifling through these 5 names. And then we'll go a little bit deeper on the one that looks the best. Okay, so first, Delta. Let's take a look here. And we can see, as always, the black line corresponds to the right y-axis, which is price. The green arrows, earnings beats. The red arrows, earnings misses. The multicolored lines represent the evolution of our Zacks consensus estimates over time. And you'll see they're keeping it wavy over here at Delta. A little bit of turbulence in Delta. Probably a little bit rocky here. Even when they beat, the stock doesn't necessarily participate, right? Because there's small beats. So this is evidence of a company that does a very good job managing expectations of the analysts. And when they beat small. And when they miss small. Now, 2013, 2014, 2015, this was a much more attractive stock. Recently, however, not so good. Well, what's part of the reason for that? Delta. Why do we think Delta would have some issues? Let me load up a different chart layout here. Really? You're going to open up a new one? Okay, fine. So I'm using TradingView here, partly because they've partnered up with Zacks, I found out. But really because this is a free thing that you could use. And why am I in Lamb Weston? It's free, and it's fun. And I like it. So you can do the free trial, and stuff will pop up. You've seen that before. I've decided to go ahead and spend a couple bucks on this. So note the choppiness. Of course, there's lots of choppiness. What are we gonna associate that with? Well, look at the spike up in crude prices here. Huge move from the 40s up into the 60s. Could be a little bit of oh, look, I'm rusty on my lines. A little bit of a wedge that's forming up under here. Could potentially break to the upside. We are entering a period of strong seasonal demand for crude, so just something of note. Oh, over here on Delta, again, we see the choppiness. Although there is, a bullish move to this throughout the course of last year. But here, we've got this phenomenon where you're starting to get compressed between this 50-day and this 200-day. Now, that's something I've seen not only on this chart, but if you look at the S&P 500 overall, you're getting it. It also happens on the Russell, where the market is getting sandwiched between this 50 and this 200, okay? Not the greatest place to be. As with the 50-day providing, upside resistance that could lead to further downside. Now, something of note here. Actually, I don't want to show this with the Russell. Let's show this with the S&P. $2,600. How many times? How many times were we printing, the 2,600? Almost every day. And then now we finally broke away from that the other day. And now, today, starting to rally a little bit. I wonder if today's going to be an inside day, though. Are we going to stay within the range of last Friday? If so, that happened to us a few days ago, and then the market broke through on the next day. So we'll see what happens as the market approaches Friday's levels. We've got the rest of the day to figure that out. So why am I showing that? Because that's what's happening here with Delta. So pricing consensus, we're not getting a lot out of it, right? In terms of a nice, strong trend. No real strong trend there. No real strong trend here either. So if you're looking for options plays on Delta, these are going to be more your range-bound sort of plays, where you think it's going to stay between that 50 to 60 range. You can sell out of the money on either side. This sets up your iron condors, that sort of thing on Delta. So let's not completely forget about Delta. We're just going to shift this to the back burner for a second and take a look at the next stock on the docket. That is Bed Bath and Beyond. Now, This is pretty ugly, isn't it? This dark red line is the 200-day moving average. Slower moving average, and I always tell you that for a stock to be under that 200-day moving average, you better have a darn good reason. So let's go back to this price consensus and EPS surprise chart here, see what we're talking about. Let's go ahead and load it up. Delta Airlines. Delta, oh, not Delta. I was just talking about Delta. See, guys, I'm rusty. We knew I was gonna be rusty today. Hopefully, it's not too bad. Let's go. Bed Bath and Beyond, like I call it when I'm talking to my girlfriend. We gotta go to Bed Bath and Beyond. I never thought I'd spend a lot of time at Bed Bath and Beyond, but let me tell you, I must be domesticated because I find myself at Bed Bath and Beyond like once a week or once every 2 weeks. Which reminds me, I gotta get more CO2 for the Soda Stream. Right now, there's Zach's ranked number 4. Sell. Let's see why. Well, I mean, just dump Citi, right? Dump Citi, heading lower. Nope, sorry. Good luck being a showroom for Amazon. Used to be Best Buy that was a showroom for Amazon, right? Now it's Bed Bath & Beyond. But what's been happening recently? Is there any hope here? A little bit of a leveling off. And if we look at 2018, a little bit of a tick up, but then now this has leveled off. So, haven't quite figured it out yet. And if you look at the stock, you're going to see the same thing. So, while the real nasty stuff may be over, they're certainly having a rough time finding a catalyst. And you'll see pretty much every time it gets overbought, they dump it. Oversold, they buy it a little bit, but not much. And then they just dump it again. Here, this is a continuation pattern that I've seen a lot, where you got a CCI that's come from oversold, crossed over the negative 100, but then gets negative again at the 0 line. Especially when you're near lows, that implies further downside. Now, here's the thing, though. The stock has been kind of winding around this sort of $20 range for a while, and we have seen some other retailers start to break out of their malaise. Now, Bed Bath & Beyond is different from, you know, Abercrombie & Fitch, right? And some of the other retailers that we've seen that go Urban Outfitters, some things that are broken out to the upside. Different sort of, different customer, different inventory, different sales altogether, right? I mean, this is, you get all your as seen on TV stuff at Bed Bath & Beyond. There's a lot of people eating away at Bed Bath & Beyond's market share. So, I don't know. Maybe one to avoid there, Bed Bath & Beyond, but could there be some real bit of bad news that causes that break of 20? That might be worth something. Worth looking at a little roll of the dice. Maybe the $20 out of the money put. So this is what I'm going to start doing, actually. DAL, I'm going to put my notes here. Possible Iron Condor on. And then this is maybe a breakdown below 20. Okay? I'm going to keep sort of a running tally of what we're looking at here. All right. Now let's go to Wells Fargo. We're going to make the shift here to the banks. So we've got 3 banks to look at. Wells Fargo, Citi, and JPMorgan. Now, I had Bank of America in Momentum Trader knowing that the Fed was going to tick up rates here, and that should have a bullish effect on bank stocks because of that interest margin, and there you go. We haven't had that, though. We have not had that love. Zach's ranked number 4, sell. And look at this madness. Another really choppy scenario where this price consensus and EPS surprise chart is just all over the place, right? We're not here looking for the most erratic behavior we could possibly find. That's not how you're going to find a winning stock. You're going to find a winning stock or a winning trade by looking at a pattern, a clearly developed trend. This is really, all this spells, what it should spell to you is just risk. All this bouncing around. And again, earnings trends take a while to develop. Price trends can shift on a dime. Their earnings trends are all over the place. So I can't trust much of anything coming out of here because there's just no direction to it. And if you look at the stock, there's no wonder. It's another sort of thing where you're just herky-jerking all over the place. Now, here's a sort of a $50 floor. You got a little bit of a rope-a-dope under 50 in September of 2017. Nice run up, stalled out at 66. Disappointing earnings report. The bottom falls out. And now here it is, underneath that 200-day moving average. Does it likely come up to test that 200-day? I would say that 56 might be a good area. Maybe it comes up to test that. So we got this sort of 50, 56 range. And we know it's very erratic. So perhaps some regression to the mean. So WFC, do you get regression to the 200-day? Although in this case, I suppose you would call it regression if it was a linear regression, but it's moving average. So let's just call it a retest, right? Retest of the 200-day, perhaps. And that's at 56. JPMorgan. Again, Wells Fargo, JPMorgan, Citigroup all report before the bell on Friday, which could set up a nice and exciting Friday. Zacks ranked number 3, hold right now. A lot smoother than what you saw at Wells Fargo, right? Uh-oh, I got into pink highlighter mode. Thug pink. A lot smoother. Where they ratchet down expectations. The stock sort of follows. You ratchet it down. But something curious happened here in 2017. Coming out of 2016, everything sort of ticked up. And look at these 2018 estimate numbers. There's some serious strength here in JPMorgan. So that's great. That's something that you do want to see when you're looking to get long a stock. Here's another good thing that's happened here. These estimates up there while the stock has retreated a little bit. That's what you want to see. You want to see a divergence between the stock price and the earnings estimates, because that creates a little bit of an opportunity there for you. So we do have divergence. Let's look at the chart. Now, I guess I can go back. Let's just go back here. This is May of 2017. You can see these dips close to that 200-day. Look at how the 50-day held up in November. Little rope-a-dope action at the 50-day. Gets back to the 50-day. Finally gaps under. But if you notice, JPMorgan hasn't gotten anywhere close to that 200-day moving average. Still in a pretty strong uptrend. As long as that trend continues, I'd say this thing is oversold. And you're looking at an opportunity similar to what you've seen here, 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 right? Although that is under the 200-day, I understand. But look how close that 50 and that 200 got. So you do have the recent oversold crossover, just about to cross over that zero line. JPMorgan probably looks the most bullish. JPM oversold CCI buy. Just keep putting questions there. So CITI. All right, so let's look at Citi. Zach's ranked number 3, hold. Perhaps this earnings divergence is even better than JPMorgan's. Never mind in the last few years. Look at how things have evened out, and then there's this big jump in 2018 expectations. Meanwhile, the stock has come down. When's the last time Citi missed? Q1, the Q1 report. Or that's the Q4 report. Yeah, this is the Q4's earnings. So that's really where the whammy comes in. I was looking to see if there was some cyclicality, right? So watch out for that Q4 report out of the banks. Watch it there. Watch it there. We don't need to worry about that. That already passed. Stock did all right. Now here we are. I like this. I like when there's divergence between those two. Pull up the Citigroup here. The other neat part about trading a stock like Citi is because they're so widely traded, right? They're always one of the most, the highest volume stocks. So the spreads are nice and tight, and that extends to the options market as well, typically. So you're not going to get in one of these situations where you're stuck paying a lot in that gap between, the bid and the ask there, right? So lots of liquidity is good. Now what's been happening, look at that dip underneath the 200-day and a significant dip below the 200-day. You get the dip below the 200 and the oversold, right? Now, wouldn't you be expecting a stock that was a little bit more downtrodden, especially on the earnings side of things? So why don't we investigate this a little bit? We're going to look at both of these. We're going to look here on Citi, and then we'll do the same thing with JPMorgan. Here, let me put here Citi. Same story as JPM. Again, before the bell on Friday. Not a lot of revenue growth. You shouldn't expect a lot of revenue growth out of a company that's going to make $19 billion this quarter. 4.5% revenue growth, still all right. Look at the EPS side of things, though. Who thought that Citigroup was going to have 19% EPS growth this quarter? Do not count me among those. Next quarter, 25%. Current year 20, next year 15. Those are great numbers, regardless of the size of your company, but especially when you're talking about a company the size of Citi. Lots of analyst coverage, lots of arguing. That's why it's got the Zach's rank that it does. Little bit bullish. 5 analysts increasing over the last 60 days for the current quarter. Outweighs the bears. Next year's sort of the same story. What's the overall impact on our Zach's consensus estimates? Well, we've gone from $1.56 to $1.62 for the current quarter. Next quarter, $1.52 to $1.59. Current year is $6.11 to $6.40. Next year, $6.99 to $7.37. Big numbers. Surprisingly big. I did not think it was going to be that big. And then, of course, you see the solid 9 cents, 10 cents, 6 cents, 12 cents. So you end up getting a beat. So those are solid. Let's do a comparison here to JPMorgan and see how solid these are. See if anything jumps off of the page here. Sales, 11.5% increased revenue out of JPMorgan this quarter. Next quarter looks like 5.9. Current year 9. Next year 4.5. Look at this. Current quarter EPS growth 38%. Are you kidding me? Next quarter looks like 22.5. Current year 29.4. It's going to be good. Things are looking good at JPMorgan Chase. Over the course of the last 60 days, 5 analysts have increased their estimates for the current quarter. Current year, 4. Definite bullishness. And look at this. Look at this. 203 to 228, 205 to 223, 836 to 889, 913 to 967. Might even be better than what we're seeing at Citi. So, JPM, Citi. I think both of these stocks are worth a shot on the bullish side. Let's see how expensive this is going to be. First, let's pull up Citi. And again, I'm going to give you a little idea heading into the earnings report, right? Before earnings, what you may be able to do. You don't have to do any of this. I'm just throwing out ideas, okay? Giving you a bullish. In this case, I'm going to give you a bullish idea here on JPMorgan and Citi. Now, here's the thing. You already know the expectations now on 5 different stocks, right? I'm talking maybe Condor on Delta, maybe a breakdown below 20 on Bed Bath & Beyond. That's something to take a look at. Retested a 200-day from Wells Fargo. I would even avoid probably Wells Fargo altogether and pick one of these JPMorgan or Citi trades and then maybe get in on this Bed Bath & Beyond. That's sort of what I'm looking at. But after these report, if you see something out of the Delta report, right, that's coming out, you see the report out of Delta, and it looks like, you know, they're really moving. Well, you know, heading into it, it looked more like a possible iron condor, and then it is starting to break out. So that can influence your trading the day of. Okay, so you can take what you've seen here, learn sort of what the market's expectations were ahead of that report, wait till after the report, and then you can go ahead and dig in. In the future, we're going to do day of again, live stuff. It's going to be fun. Just not yet, but it's happening again. Tajesh has a question about, am I worried about the 210 spread? I think for the overall economy, you should be terrified. Should be absolutely terrified because there's a flattening of the yield curve that's happening. We all know what happens after flatten. Inversion. That's when we're all looking for jobs. I know I'm being kind of cheeky with that, but you don't want to see an inverted yield curve. Okay? But 210 coming down a little bit here? No, I'm not that worried about it. The yield curve is reflecting sort of the growth and inflationary expectations of the market right now, and I think it's going to continue. It's going to continue to flatten over the course of the next few months. I mean, it's getting pretty flat. So does it concern me? Not in the short term, I guess. Not even for... I know it should worry you a little bit about the banks, but I think as rates move, the banks are going to be just fine. Okay. We just saw their huge numbers, right? So they're going to be okay. I feel like I need to zoom in on this. Like, this is too small for you folks. Right? It's a little bit bigger now. Still looks awful small, but whatever. Citi, they're reporting the day of. And I was looking for... So if we go to March, or May. What was I talking about with Citi? I mean, a decent report could set up something great, right? You've got this sort of downward sloping line. A decent report could break out from there. It's also going to get you above the 50-day. So 74s. Let's switch from the stack view to the side-by-side. Hang on, I got ahead of myself here. Sort of price in what this market is looking at. 70.5. See if I can get my handy-dandy calculator situated properly here. At the money calls, basically, let's just call it 107. At the money put, we'll call that 1 128. So it's 235 they're looking for. A little over 3%. 235. So we're looking out 73s to the upside. So if you go out to the May expiration, hey, I said it right that time. Do the stacked view. How much is this 70 call going to cost you? That feels expensive for this. I suppose it's not too bad. So here's an idea for you City Bulls. Long May, what is this, 18th? I'll go back and find that exact number. $70 call, 266. Simultaneously sell the $75 call. You're going to get back 77 cents of that. That's 189. Difference in the strike prices is $5 minus the 189 means you can make 311 on 189 or 164%. All you would need is shares of Citi to close at or above 75 at expiration. So we're going to say the bull debit long the May, and let me get this exact date for us and whatever this number was again. Let me remember this number. Yeah, May 18th. There you go. Long the May 18th 70-75 call spread for a 189 net debit. Risky business. You got 189 at risk. 75 is beyond that 50-day moving average. Already sort of on like a technical buy here. Might be a decent play. If the market keeps marching to the upside, you might be fully in the money on that trade ahead of the report. So that's not a bad idea. The other one we got was JPMorgan. Let's look at these guys. The cool part with these stocks is since they're going to be reporting on Friday, and there's so much liquidity in those options, like with Citi, you'll be able to trade that instead of trading the stock, which is fantastic. Limited risk, unlimited upside. I love those types of plays. Let's just see what the options market is pricing in here. $112. See, they're not expecting hardly anything out of JPMorgan either. At the money call, 157 by 160. Let's call that 159. At the money put, 184 by 186. We're going to call that 185. So that's 344. They're looking at for 112. 3%, pretty much even less than they were looking for out of Citigroup. So a little bit more of a move out of JPMorgan. Here, if you go out till May, let's go ahead and stack this. Just give yourself a little bit extra time. I mean, you could do the April expiration if you wanted to. You don't have a lot of time in there. I don't like the pricing, guys. I don't like it. Plus, we don't have, our sort of intermediate numbers here. I kind of would like that better. Let's see about selling. What if I could sell 105s? Sell 105 put spread. Maybe there's an idea. 105 put spread. Not sure how much love we're going to get here. Looking at this, if you sold the 105 put, you're going to get 153. Simultaneously buying the 100 put just to go ahead and protect your downside. So you're gonna get a 72-cent net credit, but the difference in the strike prices here is $5. So you're gonna have 428 at risk. So you can only make 16% on this trade. Yeah, I don't know about that one. I don't know about that one. Let's look in the front week here. Now, if you're thinking about doing anything like this, selling this sort of out of the money put spread, you could do it in that front week. But again, see, the dollars really aren't there. We're going to get 24 cents for selling this. And then buying anything here, we're really not going to get enough risk versus, we're not going to get enough reward for our risk there, even though it is kind of far out of there. Just not feeling it, okay? So there you go. So I think of everything that I saw today, I'm going to go with my with the Citi. The bull debit on Citi, I think, is officially going to be Dave's trade that pays here. So we'll see. I see Tajesh talking in the chat. That's right. I got the chat up too, guys. Looks like you guys were bearish on these financials heading into that, and hey, you're certainly entitled to your opinion on that. Go ahead, right? I'm not the authority on what you can and can't do. If you've got a different thesis, you've got a different thesis. Just based on what we do here, this is what I'm looking at. The Citi Bulls. I think that's yeah, the Citi Bulls is the way to go. Okay? All right. Well, that's it. That's my inaugural new Monday game plan, whatever you want to call this thing. I feel good. We got to cover a lot of different stocks that were jumping off the page, and then of course now we're right here in the teeth of earnings season. So that's gonna look. Now here, what are we looking? Any reason to try to play VIX to the downside? I mean, yeah, right? If the market can hold up, for sure. I think the days of sub 10 VIX are probably behind us. But could the VIX get down to 15 if the market continues to rally? Absolutely. You do got to be careful, though, Kurt, into the beginning of earnings season, because you do tend to get some choppy action as different sectors and industries are reporting. You kind of get this push and pull effect. That's why if you look at the VIX historically, now this is all skewed, but you'll see these spikes happen every few months, right? So there's a certain amount of cyclicality to this. Every few months. So we could be just in this period of enhanced volatility here. And look at this. This is basically when the ETNs blew up, right? When the inverse vol ETFs blew up. I think most of them were ETNs, technically, exchange traded notes versus funds, right? I can't remember which one they were. They're blown up now, so who cares? So there you go. Do I think Citi can go to 80? Yeah. Let's see. Sure, why not? Is it going to happen overnight? No. Could it happen over the next 3 to 6 months? Absolutely. Absolutely. We get this trade war stuff to calm down, and we get these real economic numbers coming in, continuing to be good, and you get decent earnings. And, yeah, I think you're going to be rocking and rolling. I think so. All right, folks. So, again, if you're not hooked up with me via email so that you're getting these, shoot me that email, livetrader@zacks.com. I will put you on my my good list. My good list. And then There's the Discord chat going along the bottom of the screen there continuously. And that's it. So that's all I got for you here. That's going to be it for me for the week as far as video is concerned. I know we're going slow. I might get a Dave's Daily Dive out on Wednesday, something like that. I don't know. I still got to figure it out. And then earnings season's really kicking off this week. So, and I won't be able to do a morning of video on Friday because I will be predisposed. But aside from that, I want to thank you guys so much for not forgetting about me and coming back. So I will see you all for sure next week and probably up in that chat as well. So thanks a lot, and I'll see you soon.